Did you know there are secret banking rules in the US that you're not supposed to know? I've spent the last decade helping non-resident entrepreneurs and investors navigate these rules to successfully open US bank accounts 100% remotely without a US tax ID, US address, or even local ties to the US. So in this video, I'm revealing 23 rules US bankers won't tell you, but they do tell me, to help you quickly and easily start opening your own US bank accounts right now. Lesson number 1. The vast majority of US banks and bankers lie to foreigners. They do it on their website, they'll do it over the phone, they'll even lie to your face if you visit a branch in person. Sometimes intentionally, and other times because they don't know any better. And the big lie that they're all spreading is that you can't open a US bank account as a foreign non-resident. Now, this is completely false. And I know this because we help foreign non-residents open US bank accounts with major banks across the United States all the time. Now, the requirements at each bank, they do differ, and certain banks may not be willing to accept your application. But there are still plenty of US banks that will open an account for you, even as a foreign non-resident. That's why lesson number 1, which is the most important lesson that we're going to be covering, is that you can have a US bank account if you want one. You just need to qualify. And that means knowing which bank matches your profile and your deposit amount. Now, I'm going to tell you exactly which banks you should be considering in lesson 3. But first, we need to talk about taxes, which is the topic of lesson number 2. Because the biggest reason that people tell us they don't want a US bank account is because they don't want to trigger US taxes. But just holding money in a US bank account doesn't trigger US tax liabilities. If you have a US bank account, you can deposit and withdraw funds freely, and the IRS doesn't tax you on the balance itself. And that includes depositing money in bank deposits, CDs, or time deposits. Now, if the account earns US source interest, like interest from US corporations, US mutual funds, US money market funds, certain US government debt, and other effectively connected income, then it may be taxed. But even then, your other income isn't taxed or even reported to the IRS. Now, on top of that, most people we help live in countries with US tax treaties, and they end up paying a reduced rate, anywhere from 30% down to 10% or even 0% depending on the treaty. So lesson number 2 is that US bank accounts don't result in US taxes on their own. Instead, they can actually be a really useful tool for reducing taxes, unlocking cheap financing, or even cashing out crypto in certain instances. And I'm going to tell you who can use a US bank account to qualify for these benefits in lesson number 4, right after I share the types of US banks that you should be opening with, which is the topic of lesson number 3. So the easy answer here is that you should open with the largest bank in the country, JP Chase. And Chase is a good option for a lot of different people, both personal and business accounts. But in most cases, we don't suggest Chase unless you have a large business or you can show up in person to open accounts. And that's because Chase's onboarding policies are some of the toughest to navigate. Plus, Chase just completely overhauled how they open accounts for US companies owned by foreign non-residents, making it even more difficult to get approved. Now, Chase and other big US banks aren't your only option. You can also open accounts with smaller US banks, credit unions, and even digital banks that can offer good banking solutions to foreign non-residents. Now, obviously, depending on where you want to open, deposits can vary pretty widely from $1,500 on the low end up to $1 million if you want to open with wealth management solutions at one of the bigger banks. And I'm going to tell you exactly how much you'll need to deposit across these different options in lesson number 5. But first, I promised we'd talk about who qualifies to open a US bank account and start using some of the available benefits that US banks offer to foreigners. So lesson number 4 is going to break this down for you. But in case you just want our team of banking experts to look at your specific situation and tell you if you can personally qualify to open in the US or if your business can qualify, we do offer a free assessment. You can just click the link in the description or the pinned comment below, fill out the information, and our team will get back to you confirming if you can access US banking or not. Okay, so let's talk about who can qualify to bank in the US. And to do this, we're going to look at 3 different factors. The first factor is where you live, so your country of residence. I'm not going to list out every country in the world, but what I can tell you is if you live in the Americas, so Canada, the Caribbean, Latin America, you have a super high likelihood of opening accounts in the United States. If you live in Europe, especially the EU or UK, there are many US banks that will be willing to support you. If you live in Asia, it's still possible, but the options, they start to decrease, and the deposit requirements, which I'm going to be sharing in the next lesson, they start to go up. And if you live in the Middle East and Africa, again, there are options, but you need to have a very good reason for opening a US bank account, and deposits tend to be a bit higher here as well. So let's talk about your reason. because this is the second factor that we need to look at in order to open US bank accounts. And there are a lot of different reasons why people want to bank in the US, and not all of them will qualify you for an account. Some of the most popular reasons include investing in the US, managing a US real estate portfolio, just seeking diversification, or maybe even supporting family members who are in the US, like a child who's studying at a US university. Now, all of these are reasons that US banks can very easily get behind. Of course, the source of wealth is another major consideration, and unlike banks in other parts of the world, US banks are still pretty standoffish when it comes to certain sources of wealth, like crypto. Now, that's not to say they won't turn a blind eye when sending transactions to or from exchanges, but if you want to open an account with crypto-sourced wealth, it can be difficult. On the other hand, if your deposit and wealth was generated through savings from employment or running a business or inheritance, then all of those are widely accepted and understood sources of wealth. So the point is, you need to find a bank in the US that matches your profile, which is why lesson 4 is successfully opening a US bank account requires choosing a bank that matches your profile. Now, most people, especially business owners, think that the best banking option for them is often one of the digital banks, but that's rarely the case in the United States, and I'm going to explain why in lesson number 6. But first, I promise I'd share the deposit levels across all the different types of banks that you can consider as a non-resident, and that's what we're covering right now in lesson number 5. Now, I do need to caveat this by saying the deposits are going to change depending on the bank, depending on the type of account you want to open, and even depending on how you want to open that account, meaning in-person, pre-approval, or fully remote. But generally speaking, what you can expect is 0 to 15,000 for digital banking options, 1,000 to 25,000 for credit unions, 25,000 to 200,000 for regional banks, and then 1,500 to 200,000 for large commercial banks. Now, that's a huge spread, but I can say that the people who have the easiest time opening US bank accounts, they tend to come in with at least 100,000 US dollars. And that's true both in terms of personal and business accounts. And that's why lesson number 5 is how much you want to deposit with US banks matters. But there are options for most levels. And like I said, the digital banking options can be really interesting, especially since they have the lowest deposit requirements. But you have to be careful how you use these digital banks, because if you get reported for misusing digital or even traditional US banks, you could be blocked out of the US banking system completely. I'm going to tell you how this happens in lesson number 7. But first, I said I was going to explain why US digital banks are rarely the solution that people think they are. And that's the topic of lesson number 6. But I should start off by saying I'm a bit torn on this lesson, because on the one hand, accessibility, speed, ease of use is super important. But security and making sure your money is safe no matter what are probably the most important factors when it comes to banking. And what we see is a lot of people opting for digital banking solutions over traditional banks. Now, digital banks are great when it comes to ease of use and even low deposit onboarding. But these platforms, the so-called digital banks, they're not insured by the FDIC. Sure, the underlying accounts are, where the money is held, those are insured. But the digital banks themselves are not, because they're not banks. So if one of them goes bankrupt, as a company or a platform, there's no direct regulatory body or direct FDIC protection for the account holders, which can and has really complicated the entire process. And if you're one of the people who had to deal with the Synapse failure, which affected a number of digital banking platforms, then you already know how bad it can get. People had their funds completely frozen, no access for months. Some couldn't pay rent, make payroll, or cover basic living expenses. And the worst part, it was totally avoidable, because almost everyone caught up in the Synapse failure could have just had an account at an FDIC-insured brick-and-mortar bank to begin with. So lesson number 6 is, US digital banks are not FDIC insured. And this is a big difference between digital banks in the US and in Europe. So make sure you don't hold more money than you're willing to lose with these digital banking platforms. Now, there are other important secrets you need to know about these digital banks as well, and possibly the most important secret is how you actually access the account, though this can impact regular US bank accounts as well. And as soon as I share lesson number 7, which can completely block you forever from US banking, I'm going to tell you why carefully accessing your account is so important. All right, lesson number 7. And it all comes down to one thing: a central reporting system that's used by US banks. Basically, if someone abuses accounts, doesn't pay fees, has accounts shut down, or misuses bank account services, then US banks will typically report them to this central database. And that information is then shared with all other US banks to make sure they don't support undesirable customers. And if you get put on that list, you're effectively being blacklisted by US banks, and you're going to struggle to open in the US ever again. Now, this isn't strictly for non-US residents. It also applies to US citizens and residents too, but it's one of those things that non-residents never think about. So lesson number 7 is treat US banks and bank accounts with respect. Because if you use your account incorrectly or abuse the relationship with the bank, it can mean saying goodbye to US banking forever. Though it's not just the banks that you need to respect, because as I share in lesson number 9, how you treat others and how the world sees you can really impact if a bank is going to approve your application or not. But first, lesson number 8. You see, every time you log into a US bank account, your bank is watching. Not just what you're doing, but where you're doing it from. They track your IP address, your device ID, even your browser fingerprint. And if something doesn't look right, like logging in from a new country, a hotel Wi-Fi, or a different laptop, it can instantly trigger fraud alerts or even lock you out of your account. Now, this doesn't mean you can't travel or switch devices, but it does mean you need to be consistent. So the lesson is that US banks track your devices, so you need to stay consistent. That means use one device for accessing banking, use a consistent IP address whenever possible, and avoid logging in from high-risk countries. Because if your account gets flagged, you'll be dealing with compliance reviews and maybe even account closures. All right, now lesson number 9. Before you apply for a US bank account, there's one thing you should do before the bank does it, and that's search yourself. Because every bank is going to run a basic online search as part of their background checks. They're not just looking at your documents or company registration information. They're looking you up online. That means your LinkedIn profile, your website, your company page. They're going to be running a Google search on you and probably looking you up in ChatGPT. And that's before they even do a deep dive with their internal compliance systems and external resources. Because they'll quietly decide whether you look credible or questionable. So before that happens, you should do a basic search for yourself. And then be prepared to counter any specific issues that you find or get ahead of issues that could cause problems with your application. And make sure your LinkedIn profile actually looks like someone that a bank would want to deal with. Because when a compliance officer types your name into Google, you want them to think this seems like a good client for the bank, instead of we should probably pass on this person. So the lesson here is search yourself before the bank does. And if you see anything that could be a problem, maybe find a way to temper it, tone it down, or prepare to discuss it with the bank beforehand. All right, now lesson number 10. This is probably the biggest US banking myth that we get asked about. I'll share the second biggest US banking myth next, which is all about US addresses. But first, this myth is about showing up in person. Because a lot of people hear that US banks require a face-to-face meeting. And immediately, they think that means getting on a plane, flying halfway across the world, and sitting in a branch somewhere in New York or Miami to open an account. But face-to-face doesn't always mean in person. In fact, most of the people that we help open US bank accounts complete their identity verification 100% remotely over secure video calls. So no flights, no hotels, no useless trips back and forth to the airport just to open an account. And this is true for people from all over the world, though not every bank offers this option. And whether remote opening is possible, it usually comes down to a few things. First, having the right bank. Second, having the right banker. And third, having the right deposit amount. So the lesson here is pretty simple. Face-to-face doesn't always mean in person. It just means you need to know which banks support remote opening that also align with your profile and your deposit amount. Okay, now lesson number 11. Like I said, this next lesson is the second biggest US banking myth that we get asked about. And it's that you need to have a US address to open an account. You'll hear it from big banks like Chase, Bank of America, and Wells, and you'll also hear it from smaller banks and credit unions. They'll basically say something like, we can't open an account without a US mailing address. And while that may be true in some cases, it's not always true. Even certain big US banks will let you open without a US mailing address, and instead, they'll just courier your debit or credit card to you overseas. Now, there are US banks that do require a local residential address, though even then, you don't need to own a home in the US because there's still a number of different address options available that can easily pass these requirements. I know because our clients use them all the time to successfully open accounts. But the lesson here is you can open a US bank account without a US address, but you need to pick the right banks and you need to come in with the right deposit. Now, like I said, if you can meet those deposit requirements, you still have options, which is what I want to touch on in lesson number 12. Because a lot of people think that they can beat the address requirements with a virtual address. They'll set up a Wyoming LLC or a Florida LLC and use a virtual office address when applying for accounts. And here's the thing, this can sometimes work for a little while, but not forever. Basically, most US banks eventually catch on. And that's because the United States Postal Service flags addresses that are commercial mail receiving agencies, or CMRA addresses. Basically, these are addresses operated by mail forwarding companies, and most banks don't accept them. That's why lesson number 12 is if you use a virtual mail address, make sure it isn't a CMRA address. Because if it is, you'll either be denied outright or get stuck finding an alternative option in a few months from now. But addresses aren't the only hurdle you need to overcome, especially if you want to use one of the 3 methods for opening US bank accounts that we help our clients use. I'm going to share all 3 of these methods in lesson number 14, but first, let's talk about the next major hurdle. Lesson number 13, which might sound ridiculous, but I'm talking about phone numbers. More specifically, phone numbers that can receive SMS verifications for logins, changing account details, and even transaction information. That means you need to have a US phone number at the time of opening a US bank account that can receive text messages from US banks while you're inside and outside of the US. A lot of people miss this, and it can cause serious issues, cutting you off from your money. So the key here is getting yourself a US phone number. And since we're talking about foreign non-residents, that should be a phone number that's going to work for you while you're abroad. And yes, there are options that work. We've seen our clients use a few options successfully, though they always seem to be changing. Now, one important thing to remember is standard voice over IP phone numbers typically can't receive 2-factor authentication messages from banks. It has to be a real SIM card. That's why lesson number 13 is make sure you get a real US phone number before opening accounts. All right, now lesson number 14. One of the main reasons people reach out to us for help with US banking is to avoid traveling to the US in person. And it makes sense because after flights, hotels, taxis, and running around to different banks, most people are spending anywhere from $3,000 to $5,000 just to try and get a bank account open. And it's not even guaranteed. Fortunately, showing up in person isn't always required, but it does increase the options available to you. Now, if you just want a guaranteed way to open US bank accounts remotely for businesses, I'll tell you how to do that in lesson number 15. But right now, I want to tell you the 3 ways that you, as a foreign non-resident, can open US bank accounts for yourself or your business. First, in-person account opening. This is where you physically show up at a branch, sit down with a banker, discuss your needs, and get an account open. It's pretty straightforward. Second, pre-approved account opening. Now, this is something that we specialize in for our clients who need US bank accounts but can't meet the higher deposit requirements for fully remote opening. Basically, before clients travel to the US to try and open an account, we introduce them directly to banks who have pre-qualified their profile and help them through the entire account opening process and then get a tentative approval from the bank that your application is approved. And that tentative approval hinges on one thing: showing up in person to sign the documents. In other words, you just need to visit the branch, meet the banker, sign the account opening papers in person. Now, the best thing about this is you don't have to worry about running around to different banks hoping the account will be open, because we've already pre-qualified you, introduced you, and you've completed everything but the final step in the application. All right, now the third and final option is fully remote. This is exactly what you think. You can open a US bank account from the comfort of your home. Now, depending on who you are or what type of account you want to open, the options are going to vary, and so are the deposit requirements. So the lesson here is that there are different ways to open US bank accounts. And if you want help with navigating the best strategy for you or your company, you can fill out an assessment right now by clicking the link in the description or the pinned comment. It takes 2 minutes and we'll tell you if you qualify to use any of these strategies or not. Okay, now lesson number 15. This is a quick one. It's about guaranteed remote account opening for businesses. It sounds too good to be true, and it might be, depending on the countries involved and your residency. You see, platforms like Wise, Mercury, and Payoneer, they can give you instant access to the US banking system without ever stepping foot in the country. They'll issue a real US routing number and account number so you can receive ACH transfers just like any local business. Now, to be clear, this isn't a long-term banking option. At least we don't think it is. But if you just need to collect payments, move funds between platforms or accounts, or access the US system quickly, they are definitely worth considering. So lesson number 15 is to use fintechs for quick ACH access for US businesses. Okay, now let's switch gears for a second, because even though remote banking is possible, lots of people still choose to open accounts in person. And that's the topic of lesson number 16. Because opening in the US does have its benefits, including lower deposits, more streamlined opening, immediate approval and access to payment cards. Plus, you can also access a wider range of banks, including many sought-after banks like the major US commercial banks. But if you choose this path, You do need to be serious about preparing for your interview and your application because it requires supporting information, documentation, certified copies or originals of various documents, proof of income, all the stuff that you're going to expect to provide when opening a bank account. But every bank is different. So before you go to the US and try to open accounts, make sure you find out exactly what will be required of you before you apply, because otherwise you could end up getting denied on the spot. That's why lesson 16 is prepare supporting documents before showing up at US banks. All right, now it's time for lesson 17. And this is all about keeping your US bank account open. In other words, avoiding freezes and account closures. Because what a lot of people don't realize is that opening a US bank account, it's not that hard. But keeping it open after it's been approved can be a challenge. So I'm going to give you a few things to consider that will help you avoid getting your accounts frozen or closed. First, inactivity. This may seem basic, but you can't just deposit money in an account and forget about it. And I'm not talking about years here either. You should have activity in your account every few months, every 6 months at the latest. Otherwise, your account could be closed. Now, second is access. I talked about this a bit in lesson number 8, but to get specific, I'm referring to where you log in from. And if you log in from countries that your bank doesn't like, your account can be closed. We even saw this with digital banks like Mercury, which was forced to close a huge number of accounts by its partner banks a couple of years ago when people logged in from countries that they didn't like. All right, so next is source of deposits. Basically, if you receive money from high-risk companies, platforms, even crypto exchanges, you could see transactions frozen and even accounts closed. So lesson 17 is be smart about how you use your US accounts. In fact, even the transfers you receive money from can end up closing your accounts. But I'm going to share more on that in lesson 19 because it's super important for foreign non-residents looking to bank in the US. But before I touch on that, I want to reveal probably one of the most attractive benefits of US banking. And that's going to be covered in lesson number 18, which is all about US real estate. More specifically, building your own US real estate portfolio and using US banks to pay for it. You see, most people think that you need to live in the US or be paid by a US company or be willing to invest cash in order to invest in US real estate. But that's actually not true. Because with the right bank, you can qualify for mortgages based on the property's income, not your personal income, which means you don't even need US credit history to get financing. And this approach allows non-residents to build entire real estate portfolios in the United States. And banks that we work with offer this sort of financing to foreign non-residents, helping them buy real estate across the United States. So you can buy, rent, and grow a US property portfolio entirely from abroad. That's why lesson number 18 is that US banks can help you build your US investment portfolio. And it's why some of the biggest benefits offered through US banking don't even relate to banking in the first place. But there are restrictions on these programs, including the countries that can access them. And that's a nice segue into lesson number 19, which is all about how different countries can impact your banking options. But you need to be careful because even if you come from an approved country, banks are still going to be monitoring you and reviewing your activity to make sure they still want you as a customer. But I'll tell you all about that in lesson 20. First, let's look at how different countries can impact if you can open a US bank account and even access specific services like real estate financing that we just discussed. You see, there are 5 main categories of countries that banks assess, which include where you're based, where you're from, where you access your account, where you send money to, and where you send money from. And depending on the bank's onboarding policies, even the bank's core markets or preferred markets, the countries that fall into these categories for you will impact which banks you can access, how much you'll need to deposit to be approved for an account, which division of the bank that you're going to need to go and open with, even the specific bank products that you can access. So countries are a very important consideration, and it's about a lot more than just where your money comes from and is going to, which is why lesson number 20 is that US banks care a lot about the jurisdictions tied to your profile. And if you're constantly sending and receiving money to and from places like Nigeria or Lebanon or Bangladesh, then you're probably going to be facing a lot of challenges. But your challenges don't end after the bank account is open. And that's what we're talking about in lesson number 21. Because even after you're approved, US banks quietly audit your account activities forever. Not through an email or a formal request, but through what's called a shadow audit. Basically happening behind the scenes. And it means that banks are constantly comparing what you told them when you open the account to what you're actually doing with the account. So if your stated transaction activities don't match your monthly inflows and outflows, the system's going to flag it. And if you said you needed to open an account to cover US related expenses or to receive transfers from a US brokerage, but then every transfer coming in or out of the account is from Belize, the bank will be alerted. And once that happens, your account can be restricted, reviewed, or even shut down without warning. So don't assume just because your bank isn't contacting you that everything is fine. Your account activity is always being analyzed. That's why lesson 21 is that banks are always auditing. So make sure the expectations you set during account opening match reality. And that brings us to lesson number 22. This is one of the most important things that we're going to cover in this video, but it only really matters after you're dead. Because if you're a non-resident holding more than $60,000 US in a bank account, your estate can owe up to 40% inheritance tax. And it applies even if you've never lived in the US, never paid US taxes, and never earned a dollar there. Because under US law, any assets physically located in the United States, including cash sitting in a US bank, can be subject to estate tax when the owner dies. It's one of those hidden rules that catches wealthy people completely off guard. Now, the good news is you can plan around it using international trusts, changing ownership structures, or simply moving funds into non-US custodial accounts can dramatically reduce or even eliminate that exposure. But you need to set it up before something happens. That's why lesson 22 is that US inheritance tax can hit non-residents. So plan ahead before it's too late. And that brings us to our final lesson, lesson 23. Which is that if you know which banks to approach, how to apply, and what documents to bring, then the process to open a US bank account, it becomes clear, predictable, and repeatable. And when you get to that level, opening your first US account stops being stressful and starts being strategic. But here's the thing. US banks should only form part of your international banking strategy. They shouldn't be your international banking strategy. Instead, you need to be using different countries and different banks to unlock the full protection and freedom that international banking can offer. And I share one of the easiest jurisdictions that almost anyone can access to immediately strengthen their international banking strategy in this video right here, including with deposits as low as $5,000 with solid international banks. So give that a click and I'll see you over there right now.